This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe, and welcome back to the channel. Today is the stock market update. I'm doing this as of Thursday's close, so I'm going to post it up Friday morning. And what I want to focus on today is I want to show, so I do a show for Stock Charts TV called Stock Talk. Hopefully you guys catch it. It's posted up there on Thursday. You can find it on YouTube, Stock Talk with Joe Rabil. And so what I talked about today, I referred to the S&P when I was going through it, and I was looking actually at some pretty big names this week. And I was talking about how to define the trend using the moving averages, and I used the 18 and the 40, and it shows how we can look for and see confirmed trends using the 18 and the 40. What I want to do today on this show is I'm going to talk about that, but I also want you to understand the difference between a confirmed trend and what we would consider to be a presumed trend, like what's important about what's taking place and what is the true driver in my approach, which is the 18 in each time frame. So let's go ahead and get going on this. So I've got my standard 4 time frames up: monthly, weekly, daily in the upper right, hourly in the upper left. Okay, now what I'm going to do is I'm going to click here. If you notice, I've got my 18 and 40 in each time frame. And for the moment, I just want to get rid of these trend lines because I want to focus on the moving averages today. So we've got 18 and 40 in each time frame, right? And they're helping us to define the price structure and really confirm price structure, price trends. If I click on this button now, I'm going to look at a chart, same charts, same time frames, everything's the same. The only difference is there's no 40 up. There's only an 18. And what this is showing is the 18 tends to be the trend line, not necessarily the trend, but in most cases it ends up being the trend line. And as you know, I don't use a trend line as a confirmed trend change. It is a sign of potential trend change. So I used to draw thousands and thousands of trend lines on all my charts. And I kept on noticing that every time I drew a trend line, underneath it, there was a moving average there. And I'm like, what the heck? I mean, I keep drawing these trend lines and there's a moving average doing the same thing. And it doesn't happen all the time, but the majority of the time, I would say 80 to 85% of the time, the trend line will quite often be the 18 in that time frame, and it could be a 20 if you use a 20, or even a 21. I mean, when I first started in the business, we used a 21, 50, and 200 day on a daily chart, right? And now, you know, I like to use an 18 and a 40 in all the different time frames. So the 40 is the 200 in the next lower time frame. So a 40 week is a 200 day. So I don't have to put an extra line on my charts to see what the 200 day is doing, because if I'm looking at multiple time frames, I know what the 200 is on the next lower time frame. So it's a nice way to kind of have the look of what's going on. But I wanted to show how the 18 is the driver for what I'm doing. But I also want to explain the difference between the 18 and the 40 as a trend indicator versus just the 18 by itself. I would consider the 18 and the 40 when both lines are moving in the same direction. Like when the 18 is below the 40 and both lines are declining, that trend is down. It's basically confirmed down if price is below the 40. It doesn't necessarily have to be below the 18, but if it's below the 40, both lines are down and they're sloping downward, and price is at least below the 40, we are in a bearish trend. I looked at this for a really long time trying to figure out the combinations that made the most sense. And even though this rallied all the way up, it got pretty close to the 40. Both of these lines stayed declining. So throughout this whole rally, the trend on this time frame was down. Now, if it gets above there, then it kind of turns neutral. Or if the 18 flattens out, then it turns neutral. But as long as they're both declining, the trend is down. Now, if trend is up, as long as both of these lines are rising. Well, look at what's happening here. We have a flattening line on the 18. Okay, so I've got a rising 40 and a flat 18, well, that tells me this trend is neutral. But what I want to do now is show you how this can give us kind of early warning signs. If we're just looking at the 18 as the driver in each time frame, I know that something's changed because this was rising and now it's flattening and rolling over. This is a pretty big negative. The fact that we failed at this line is presumptive evidence that the trend is shifting. Okay, so way back here on this rally, as this was failing at this line, we knew there was a problem developing. By the end of the month, when this closed under 400, we knew there was a pretty big problem developing in this time frame. That the time frame was changing. What was an uptrend is now starting to show signs that something is flipping. Now, if you notice what happened on the weekly, when we failed here, the trend turned down. Now, yes, we got above this line, but it stayed declining. And as long as that's the case, that trend is down until we see a change, until we see this flatten out in some way, shape, or form. We have to assume that the trend is down. Now, on this time frame, this is where it starts to get interesting. Because as I said, the moving average is the trend line. Well, look at this. If I drew in the trend line, you see how it broke the same day it broke the trend line, it broke the 18. Now, here's what's troubling about what's going on, because basically everything's the same, what we've been talking about, which is we've got this momentum divergence potentially developing with MACD, but we don't have a great look to the ADX. So these are kind of, they're not giving us the same feedback. This is definitely more bullish than what I'm seeing here. Even though this is divergence, the sellers are still in command because we held above the 25 line. So we have this potential, but what's missing is confirmation on the smaller time frame. And while we have broken the downtrend line and we've broken the 18, what we haven't done is we're starting to flatten it out, but we haven't proven that we can hold that. Just like when we failed here, we kind of proved that this line meant something. Now we have to prove that we can hold this line. We're right at it. We're closing right at that line. It's flat and it's not rising, so I need a little bit more proof. I need this to turn up and even probably go and take out this prior high and maybe even take out this prior high, but at least we have to get through here. Because this is flat, I'm not looking to buy a pullback. I'll put it to you this way. If this were rising, if this had turned and was rising, then I'd be considering looking at this as a potential pullback play. Especially with the improving momentum conditions taking place on the MACD on the daily. But because that hasn't happened, and because this pullback was harsh, and let's just look at the price action for a second. I mean, we want to recognize what's going on because this is a beautiful bar off the low. I mean, massive gap down, comes all the way back up, and then look at what happens the next day. It gaps up, and then it gives back half of that bar. Now, it only gave up half of it, so this bar is still in pretty good shape because it held the midpoint. The problem is, then we have an inside bar with a higher close, meaning we close in the upper end of the range on this inside bar. But then we try and gap up again. So this bar actually closed above the 18 for the first time in this move and then had follow through the next day. So see, let me point this out. So this was the end of the trend where this was failing at this line, and then we rallied up. Now this bar closed above, but we didn't take out the high of that. So we did not officially take out the 18. These two bars never closed above the 18, so we never had a trend change there. Or official break of the 18 there. Now we had a break of the 18, and then look at what happens. The next day we get above this bar, but look at how it did it. It gapped up and it crapped out and gave up basically all day long. And now we've been drifting lower. So this is not good follow through, I guess is the point I'm trying to make. We had a really good move off the low, and then every time it tries to get going to the upside, it's met with selling. So we're now at a pretty important crossroad for the market, because I think if this fails here, then we're probably going back and at least testing the midpoint of this. If it can hold in this area, somewhere in this zone, Friday morning, and turn up, we really want a good day. I mean, I'm just asking for a single good day right here without any more downside progress. I really don't want to see this drop down again or wait until next week to have any kind of a up move. I really want to see this start to turn from this 18, because if we re-break the 18, then you're kind of sloppy. It's not really a shift, in my opinion, especially if we're trying to turn this around and at least get a rally back up towards the 18 week, maybe a little bit better than that if this can get going. Now, look at what's going on the hourly, because let's first show this. So I mentioned the trend line break to the downside, and we're basically trying to form a 1, 2, 3 this way. Well, this broke the trend line this way, tested, and now turned down. We have a 1, this is a 1, this is 2, and this was 3, taking that out to the downside. So this is trying to do it to the upside, and this just did it to the downside. The problem with this signal, if we start looking at what's going on here, is the momentum. There's no momentum here. ADX is low. This is a chopping block. Gap down, turn up. Gap up, turn down. Gap up, do nothing. Gap up, turn down, right? And then try and make a move and even take out, I think it even took out these highs and then puke it all up. So this is the epitome of chopping block. No trend whatsoever on this time frame. Now we're coming into a pretty key level because we're coming into the 0 line on MACD. And the question is this going to hold, or is this rolling down again? Remember, every time we make a move through the 0 line is kind of key in all time frames. We want to see how it reacts. Do we get a failure there? Do we get just a little bit of overrun and then we turn back around? So a lot of things to kind of keep an eye on here, but we just did a 1, 2, 3 to the downside, and it has 0 downside momentum, really. I mean, nothing that I would consider to be all that exciting. So it's a yawner right now. It's a bit of a yawner. It's kind of unfortunate because we had this great bottoming bar, and we look like we were going to follow through and actually turn back to the upside. Well, now we need another bar, maybe not this big, but something like that to come up through this prior high to really convince us that things are shifting. Now, if we get a shift on this time frame, then our target is this time frame because that line is declining. Now, a lot of times you'll overrun that, just like we did here. We did a little bit here until this line flattens out. Now, if we get through this line and flatten it out, then we're looking to hold this, and then we'd be looking to go towards the 18-month line, so the next target. That's how I would go and keep using these over and over again that way. Just keep working up to the next time frame. If this can hold and this can turn, then our next target is the 18 on that time frame. So this is the process you want to go through. I wanted to make sure I spent a few minutes talking about presumptive changes in trend without the confirmed evidence, because when these two lines are declining and you're below it, the trend is definitely down. This trend is negative right now. Where this is turning a little bit now and flattening out, we've got a little bit more evidence that, we're starting to try and flip things around. Even though this line is declining, the driver of this approach is using the 18 in each time frame, all right? And then the 40 acts as a supplemental information. All right, so anyway, post any questions or comments, and we'll see you next time.